Hello everyone, welcome to our new webinar. So before we start, we will wait a few more minutes. Everything seems to be working well. Okay, sound is also good. Hey team, how are you? Haven't heard from you for a while. Okay, sound is perfect, good. Well, that sounds good, team. I know that you're pretty experienced. Okay, so traders, listeners, welcome to our new webinar, like each Monday, 14 GMT, where I will walk you through some of my Elliott wave views on mostly on the FX markets, but obviously, as you know, I'm tracking other markets as well, such as metals, indexes, commodities, energies, because everything, as you know, is linked. So last week, as we know, US dollar has seen quite a nice and strong close going into the end of the week after the US home sales and PCE index jumped in the US. So obviously inflation is still on the table, and that is driving the US dollar higher across the board. We have the US yields moving to the upside as well. So good economic data definitely not helping Fed much with this inflation. But there are still some speculations that, of course, they will do one or two more rate hikes, but maybe not that much later on, because there will be obviously a recession risk, which after all will or can come with a delay. So they may not be that aggressive, and this is something that could potentially stop the US dollar in from rise too high in the next few months. However, for now we are still, I believe, in a corrective phase. But before we go to the US dollar index and other Elliott wave counts, I really want to look at this just three assets when I compare them. These are gold, S&P 500, and crude oil. And as you can see here, back in at the end of January, gold was the first one that made a major top. I'm sure that if you're tracking the FX and all those markets, that you can remember that gold back then was one of the first that moved or it made a very strong reversal after that impressive rise here from the start of the year. Okay, and then afterwards what we have seen is that the S&P 500 also struggled to rise or even follow higher after these highs here from November were were taken out. Okay, so obviously everything was pointing back then that the US dollar is taking the lead because the US yields bounced, as I will show you on the next chart. So actually this gold and turn down on the S&P 500 are pretty aggressive. And what happened recently is that even crude oil has now turned lower as well. Okay, it's not really breaking down yet, but I'm just concerned of what it may happen if really crude oil would break to the downside. Okay, so if you look closely here on the crude oil, this could actually be ongoing triangle, and if we can break below, I think it's what's the price, I have the percentage here, I think let me just find it on elsewhere. I should have somewhere. Okay, I think it's around $72 per barrel. If we break this level, then I think the dollar can even accelerate. Keep in mind that I'm looking at the S&P 500 towards 3,800. I've been repeating this level for a while, and I still think that it will be quite important key level, bull bear line going forward. Okay, now if we also add, I think I have it here, or maybe not. Okay, so these are, let me remove this. Okay, this below here we have the US yield, and obviously you can see when the US yield started to rise sharply, gold was first one that moved to the downside, then S&P 500, and then even crude oil did not manage to produce any type of impressive gains here. So what I'm looking here on the 10-year US yields, we are potentially trading at this resistance, but not really selling off here. So I'm just concerned that if we really can stay here and hold above these December levels, and even more upside here could potentially bring in more potential weakness. Also, another market that we can or should look at is probably VIX. Okay, looking at VIX index here, you can clearly see that we are at the lower side of this range, and so far we are turning to the upside. I'm looking at the range here back from the start of 2022, so it means it's now 14 months or so, and looks like that we are now turning to the upside, so it means that we could easily rally towards the upper side of this range. Okay, and if that would be the case, then we know that S&P 500 could easily see much more weakness towards 3,800, as I said. Okay, so keep in mind that for now we are still in some kind of a neutral phase, or even short-term bearish, risk of phase, because as I said, crude oil can be potentially going to see a breakdown. Gold is very weak, and the S&P 500 is weak. Okay, so we have to respect all of those three factors. Now, looking at the S&P 500 wave counts, I'm still actually tracking two wave counts, but my primary wave count remains the same as I talked last week as well. So here we have potentially we have an ABC flat correction, maybe for wave B, maybe is this one already wave 2. Okay, and we will see much more upside later on after this pullback. But the idea is that this flat is still potentially incomplete, so even this bullish wave count still suggests that we could potentially reach this 3,800. Okay, looking again, I have VIX index here. As I described earlier, there is room to the upper side of the range. So if really are going to see more upside here, then obviously to buy stocks, maybe looking into towards the end of 2023, it could be the best place to do it when the VIX will be trading at these highs here, when there will be plenty of fear, because obviously markets could then do the opposite. That's how it works against the mass population. So here, as I said, for now we are still potentially facing the risk of towards 3,800. I have another wave count, okay, which shows much more aggressive scenario. shows the idea that this could be wave B rally, and potentially we could be selling off even below 2022 levels, and then we rally. So if you're a short-term trader, maybe this could be important for you, because I see, based on the both wave counts, room for 3800. Okay, now if you're more longer term oriented, then keep in mind that both of the wave counts suggest that drop from all-time highs is corrective, and that at some point we will see a reversal to the upside. And it makes sense if really Fed is going to see sooner or later the end of the hiking policy. Okay, which is expected obviously to happen this year. So that's why I think that also this year could be a turning around here on stock. And we have on stock market, and we have some single stocks in the US, like big names, trading at very, very cheap prices actually. Now, also, if we look here back and just try to compare, I will hide these VIX for now, and you can see here at the bottom I have the dollar index. So what I'm trying to do now is, if the SP 500 is really headed to 3800, what may happen with the US dollar? I mean, how high can US dollar go? Well, if we consider that the S&P 500 has another 5% room for this pullback, and this was also from that recent high was a 5 or 6% drop, when at the same time obviously dollar index rallied here for almost 4%. So if we respect this, then I would not be surprised if we see dollar index even headed towards 108. Okay, so if stocks will continue to weaken, then dollar index could be headed even towards 108. And why I think that stocks could continue to weaken, at least as I said, towards 3800, is because here I'm tracking bearish impulsive price action that can be underway. Notice that back in not back, but I mean a week back or 10 days back, we have seen a double channel breakdown. So firstly, that was a bullish channel. We have seen a reversal and then a massive sell-off. And then we have seen also here a break of this bearish channel called the base channel. So when you have prices falling very sharply from or beneath the lower trend line of this bearish channel, then it means that really drop is strong. Okay, normally that fits into an impulsive price action where you have this 5-wave movement going on. So for now, that's still not completed 5-wave drop, and that's why I think that we can potentially see more weakness here until this 5-wave drop is finished. So wave C ideal support is at 3800, which is this wave A level. Also, if we reach this level, I'm sure that you will see again plenty of media analysts, whatever, turning aggressively bearish. So whenever if we will trade at that price at 3800, the key will be where is going to be wicks trading at the same time. Will already be maybe reaching this level here around 30. Well, then this could be quite interesting potential support for a new shift in cycles. Okay, if we break this 3800 aggressively, and we will not see any kind of a bounce in 5 waves, then unfortunately I will have to go with the wave 2, especially if we just fell through this 3800 aggressively in some extended movement. Okay, so for now, even bullish bearish wave count, looking more into the next few months, I mean, it's not really important for me. For me, it's important these short-term structures still suggest that potentially we could see more weakness. However, I'm not aggressively bearish on stocks. These are just short-term swings. Okay, for 2023, I've been looking for, and I will remain bullish on stocks, but I just think that we are in the middle of a corrective phase where lower supports can be retested first. Also, looking at Dow Jones here, as you know, I shared this one as well a few times. So we've been looking for completed 5 waves up, wave A, wave B, and we're expecting this wave C weakness. So far, we retested that wave A level here, but I still think there is room for slightly more weakness here. There's a 61.8%, this wave 4 And also, if you take the measurement of a wave B of 138.2 and 161.8% extension, you will also get these levels here. So even in this one, we have room for another 3 to 4% of a drop. Okay, so yes, maybe we can be already in late stages, but maybe if you're a more short-term trader, maybe that is important for you, especially when it comes to the FX, because volatility then can be there quite aggressive. But overall, I obviously will be expecting a bounce to the upside. So again, if you're more mid-term, long-term investor, trader, maybe this area down here could be quite attractive for a new bounce. And that's when obviously I would be looking for a new turn to the downside on US dollar index, and we know what that means for the other major currencies and even cryptocurrencies and other sectors. Okay, now let's take a look on dollar index when we covered this one. So we said the dollar index has room for potentially more gains because S&P 500 has room for more weakness towards 3800. Now, looking at this 4-hour chart, I adjusted it, and I think that maybe we could already be trading in a wave C. Now, resistance here is the 38.2%, 106 is the first one, and then I said 108. So this one is resistance around the 50% here, and also it's wave 4 when looking back from November. Okay, so for now there is still room for plenty of more upside. Of course, there are also, keep in mind, end of the month flows. Okay, it's February, end of the month, so we could be potentially seeing some volatility here in the next few days. But overall, for now, this trend is still obviously to the upside. If we suddenly just will see aggressive move to the downside here, I would most likely still look this to be a wave A, and then I would be looking for a 3-wave drop. Okay, now looking at the euro dollar. Okay, someone is saying poor sound quality. Is that correct? I mean, how is everyone hearing me? Is everything fine? I can see someone is typing on YouTube, actually. Okay, so please let me know in the chat if sound is really that poor or it's okay. Okay, Tim is saying it's good. So anyway, I put my microphone a little bit closer, so I hope now will be better. Okay, now let's take a look on the euro. Now, firstly, euro dollar in a higher degree pullback, wave 2. Now, sometimes corrective pullbacks can be very quick, very fast, sometimes can be very complex. And always when you try to analyze the markets, try to go with the simplest view. Okay, so for now, that's still going to be an ABC drop. I know that, and what really concerns me a little bit is that here, this ABC drop is not that visible. Also, when you have this such a very long and quite strong impulse and extended impulse, well, keep in mind that maybe this correction will not end in just a few weeks. Okay, it can take a lot of time. However, I will still, as I said, try to go with the simplest view, and that's why I'm looking for an ABC drop still. But this one is much better visible here on this 4-hour chart. So here I have wave A, very sharp drop. You have a wave B and wave C. Now, normally, when it comes to personality of the price action, now sometimes someone asks me how you know if it's wave A or wave 1. Well, it really depends, but if you see, let's say, very strong reversal, that was an uptrend, then you see a very strong reversal here, very sharp one. Well, usually the sharp leg will be wave A, then you will see wave B, and wave C will then be much slower compared to wave A. So here in wave C, the momentum volume will be decreasing compared to the first leg. Okay, and that's very important because you know that then bears are not that strong anymore. It's completely different when you have the first leg very slow, then a pullback, and then a very sharp fall. Now that fits to a wave 3. So that kind of a personality can help you actually to define in early stages of the potential pullback that you're tracking, if really that's going to be a correction or maybe going to be an impulse. And if you have this in mind, well, keep in mind that this first reversal from the highs was a very sharp one, right? Much stronger compared to the current weakness that we are seeing. Yes, the price is still turning to the downside, but not that aggressively compared to the wave A. So if you can actually try to compare this personality very easily. You can draw this line. I will make that black. Okay, no, black is not that good. Okay, I will make this line. You can see it. And now I will make another line. And you can see where the price is compared to this line. Okay, measured from that high. You can clearly see that here we have much slower price action. And normally that's a perfect personality for a wave C. Okay, so here what I was trying to say is that despite lower prices, momentum, bearish one, is trying to decreasing. Okay, there you have a very nice support here at the former wave 4 when it goes back to 105 level. Then you have here this wave C equals to wave A below that level. So keep in mind there are plenty of stops, okay, below that level. Also, why this level is important? Well, that was the start of the January, okay, the start of the new year. Keep in mind a lot of new flows, position adjustments, portfolio adjustments happens at the start of the year and obviously at the end of the year. So during this time you can see some very strong moves, and actually I'm sure that there are a lot of stops below that levels, especially if we consider that market has made a very nice and aggressive straight move to a new high that was what 800 not 500 people move or so in a just very short period of time immediately after the new year open. Okay, and now you can imagine what will happen if price retraces all the way back towards this starting point of the new year. So I'm thinking that a lot of stops will be triggered out. Again, flows sentiment will become aggressively pessimistic regarding the euro, and we know what actually from an Elliott wave terms may happen afterwards. Probably the market will reverse. And again, I would not be surprised because we have this Fed, okay, a lot of US dollar bulls is focused now on the Fed, is focused on the US inflation. And when we have some more evidences, more puzzles from the inflation, from the what Fed really plans to do, then the shift will turn back towards other central banks. And that's when we may see some interesting reversal on those back to the bullish mode on those euro, Aussie, pound and other markets, currencies. Okay. However, for now, looking at the substructures here for this wave C, I'm not really convinced that this is the 5-wave down yet. I think that we could be now maybe in some corrective phase, minor correction, and then we see final sell-off towards these levels that I said, 104, 105. Okay. Now let's take a look. Also, I have here a technical moving averages weekly candles plus RSI. Let me take a look at here. Okay, so here we also had this one in the past webinars. Excuse me. Now here we broke below this 50-period weekly moving, daily moving averages, and normally when that's the case, it's the first indication that the trend is changing. So when you are above it, it's the bullish trend. When you're below it, it's the bearish trend. This helps very well in the trending markets. Now here you can see that we are now then in a bearish trend, but below here you have the 200 and the 100 moving averages that could potentially limit this weakness, and it comes out around 104.50 and 104.40 is the 100. So that area can be quite interesting for potential new bounce or new reversal to the upside. Now let me take a look on the weekly what we have there. Well, in a weekly you have the 50 weekly moving averages coming around 104. So that's quite interesting level as well. So here we were in a bearish trend, we broke above it quite aggressively, then we stopped at the 100 and 200 weekly moving averages, and now we are pulling back. So 50 could be an interesting support. So 104 is the level potentially to watch for. Okay, but looking at the weekly candles and still incomplete subwave C structures, 104 clearly could be in the card. I mean, market bulls will try to defend this drop here 2 weeks back. Last week, then we got another strong sell-off. So as long as we are trading below the previous weekly high, 107, I think that there is actually a chance for more weakness here when reading the candlesticks. Okay, now let's take a look on cable. So cable here, just a second, guys. Someone asked if I can check for Ethereum. Yes, I will look at it at the end. Okay, now let's take a look on cable. So since last week, nothing has really changed. I still think that we are in a bullish mode, and when US dollar will potentially again hit resistance, when we had, as I said earlier, more idea of what Fed is planning to do with the rates, or maybe they're only going to be 2 more rate hikes and they are done, then that's when again a pound could be very interesting, especially if inflation there will remain high. It's still above 10%. So I think that at some point pound will again see some traction here to the upside. Now looking at the wave count, I'm definitely tracking the bullish structure here, and we're just slowing down at this resistance for our new correction. Could be potentially flat in a way for maybe still even a triangle if we will keep chopping around here between these two major levels. But looking or ignoring the wave count, if just I delete it for a second, you can potentially also see the head and shoulders bottom formation, and I would not be surprised if we see a turn to the upside on this one in the upcoming months. Of course, there can be much deeper pullbacks, but I think that 116, 114 could still be very interesting levels for a new turn to the upside. But then obviously I would adjust the wave count a little bit. But looking at more short-term patterns here, I still think that this could be, as I said, triangle or a flat, but even if it's one or another, none is incomplete. So we have to wait a little bit more. There's even a chance for 118.45 to be retested, maybe cleared some stops, and then market reverses higher. Or if we'll see a jump above 120, that's 121.50, then this triangle could be still in play with the subwave D underway towards 123. Okay, so overall, I think it's a correction. I think we will see more upside, but for now the correction is incomplete and it's a complex one. Okay, now let's take a look on Aussie. So as you know, Bank of Australia, they said they are going to look for more hikes in upcoming meetings, and we have new inflation figures out this Wednesday. Expectations are down from last month was 8.4. Expectations now are 8.1. So now imagine if we get 8.2, 8.3 or around expectations, maybe Aussie could be even trying to catch some upside here. Now looking at this wave count here on a daily chart, well, we still have a very nice 5 waves up, and you are now in a corrective phase. And as you know, weeks back I've been saying that wave 5 probably trying to complete this first impulse at this resistance around 71.60, and now you're in a corrective phase. So correction, well, it's approaching the, however, I think that there is room for slightly more weakness. So 66 around there is very interesting level. There you have the 50% former wave 4, and then you have also the 61.8% a little bit lower. Okay, so I think that we still have some more room for more weakness in the short term, but keep in mind that we are tracking C wave here. Okay, so C wave obviously should be structured by 5 waves. Last week there was a very nice aggressive sell-off. It came actually from stock markets, and if the stock market will stay below resistance levels, or if the S&P 500 will just chopping around this 4,000, I think that there is a chance that even AUD could stay under bearish pressure here. So as long as we are trading below 68.40, okay, I think that there can be more downside after this wave 4. However, whenever we reach this support around 66.30, I think that that will be an interesting potential time for a new shift to the upside, especially if we will be able to count 5 waves down. But as I said, it will a lot depend on the CPI. This volatility on AUD will a lot depend on the CPI figures on Wednesday. So definitely until then, this trend may not change that easily. Now let's take a look also on dollar yen. Now dollar yen, for last week, inflation again was up to 4.3 from 4%, but still dollar yen moved to the upside, most likely because of the US yield, obviously, which been more correlated to the US dollar and dollar yen, of course. So looking here at the updated wave structure, didn't really change much. I still think that this could be a corrective advance, but looking at these substructures, maybe we see some kind of a pullback towards 134.20 and then another jump. I'm looking for very strong resistance to be found around 138. That goes back to December 15. Okay, now this December 15 could be quite interesting. Why? Well, I will show you in this chart. I'm looking here at the yen futures. Okay, and notice here is December 15, Thursday, and here you have this gap, very interesting one. Okay, you have this gap from back then. So maybe this market is trying to fill this area. Definitely very important straightforward move, straight break to a new high from that point. So clearly market now trying to reverse the price back to this important level. So I think that this could be quite interesting if we retest this these levels here from mid of December. I think that this could be quite interesting stopping point of this recover of this pullback. Now looking at the substructures, maybe this could even be an extended wave C. That's also one possibility here. You will see more weakness after this wave 4. Okay, and then a reversal. So definitely this one will be the important level to track if we retested it, of course. So for now, I think the dollar yen, obviously on the opposite side of this, has room for more upside. But looking at these technicals, left shoulder hat, now you're in a right shoulder. Now current distance of right shoulder is very similar to the left shoulder. However, the left shoulder has a resistance around 139. So the whole zone here obviously is very important resistance. Now the question is how to trade this one. Well, if you are more short-term trader, then what you will wait is possibly wait on a 5-wave drop first. So why want 5 waves down? Well, because only 5 waves down will tell you whenever this correction is finished or no. So looking at the substructures, you want to see something like this happening. Okay, let me add lines. So whenever you see 5 waves down, you then can look for potentially opportunities after 3 wave rallies. But as long as we are still just trading higher here and not seeing these 5 waves down, keep in mind that it's a little bit risky and that we could easily see this 38 as I said. But overall, I think that dollar yen this year will sooner or later resume the downtrend after this stop has been found here last year. Okay. Also looking here at the inflation, obviously in Japan is still ticking higher. Here in the US is coming to the downside. So at some point, maybe Japan will also have to act, but maybe after April when you have new Bank of Japan governor and maybe new actions will be taken. So who knows? Now let's take a look also on someone is asking, will you look at Bitcoin and Ethereum counts as they are moving and more people need to move? Yes, I will look at Bitcoin and Ethereum at the end, Danny. So like each time in each webinar. So yes, I will look at the end of the webinar. This should be what, in 15-20 minutes. Okay, or maybe even earlier. Okay, now let's take a look on crude oil and dollar CAD. Okay, so firstly, maybe dollar CAD. Inflation year on year reported last week to 5.9%. So this means this is actually bearish for CAD because Bank of Canada may not be that aggressive. It's no need for that if inflation is coming to the downside. So it's a completely different story when it comes to US. And with that being said, maybe dollar CAD is actually trying to form the breakout here. So I adjusted the wave count this weekend, and the reason is also because I don't want to rush into some bearish call if simply this is not happening. Okay, I've been bearish here on dollar CAD through January and at the start of February when I expected this breakdown. But after this reversal to the upside and this broken trend line, I just have to realize that we are either going to stay consolidating here or maybe even turning bullish if we can take out this 137 level. Okay, so if inflation in the US keep going higher, in Canada going to the downside, this could potentially make a bullish case for dollar CAD. So looking at the dollar CAD, maybe we are trying to complete the triangle here in a wave 4. If we suddenly will drop, let's say, back towards 134 from current levels, then maybe wave E could still unfold, okay? And you will see something like that. So the idea also behind this analysis is not only this US and Canada inflation story, but also because of crude oil. So if you look at the crude oil, I'm tracking their potentially bearish triangle, okay? As we said last time, crude oil here turned to the downside since this Monday, February 14, where the when Biden administration said that they are going to sell 26 million barrels from their reserves. And since then, market moved to the downside. It was the opposite since November when they said that they are going to buy crude oil between $67 and $72. And since then, market rallied, but not for long. So for now, if we respect this kind of personality and relationship, then I think that maybe crude oil is setting up for a breakdown. Now, looking also on trying to apply the wave count with this in mind, well, I see potential very nice triangle here on an April contract. You have wave A, B with 3 subwaves to a new low, 3 waves up for a wave C, very sharp fall for a wave D. Some would even say that this is wave 1 and you had wave 2, but even different implications here suggest the same. As long as we are trading below 82.90, I think that there is room for more weakness. If we look more short term, more closely, this could potentially be 5 waves down and you now have a 3 waves up. And dollar, keep in mind, is still strong. It will continue to rise. If we'll see more risk off, maybe now is just temporary Monday flows. We are seeing a risk on. Maybe not, should not trust it too much, those flows, especially ahead of because of the end of the month flows. So maybe at some point this risk off will still resume. Dollar will continue higher, and if we see this crude oil breaking this 73, 72.50 level, Firstly, it's a trend line, then you have this swing support. If we break this one, I think the dollar CAD could see much more upside. Okay, now if you're just from a pure Elliott wave perspective, clearly this looks like a very beautiful triangle, but it's still not ongoing weakness until you see these swing supports broken. Wave D is normally your confirmation that wave 4 triangle is finished. Okay, now I have another eye on Kiwi. Now firstly, let's take a look on New Zealand dollar, because this one is clearly very interesting when it comes to some bigger picture. Now, as I said, on Aussie, we are approaching, there's some support, and even here we are approaching some supports. However, 60-60 level is maybe the first one we could look for. You are now at the 38.2%, which is usually my minimum FIP objective whenever I want to call end of the corrective retracement. So that was triggered, and so far we are trading definitely in a very interesting zone. So that was the impulse here back from that was from October 2020, and now you're in consolidation phase. So at some point, obviously, I will be expecting move to the upside, and maybe we are not far away from that recovery. So let's say that somehow dollar will try to find top early, then I think, and that euro dollar will not drop towards, I said, 104, then, or maybe even dollar index will not relate towards 108, and we suddenly see very strong reversals by the end of the week in impulsive fashion, and we see dollar coming down very sharply, then Kiwi would probably be the first on my watch list for potential longs. Okay, because we have a very beautiful structures, but we still need confirmation from the market that really this correction is coming into play. Now, looking here at these wave structures, we have 5 waves up, now potentially 5 ABC with 5 waves down for subwave C. Now there's a very nice support here around 62, but it didn't hold. We broke below it. So the next one, as I said, 60-60 could be a very nice level. That was an interesting reaction here. Looking back, I'm pretty sure that was an interesting volume as well here back in mid of November. So maybe from here we will see an interesting reversal higher, but as I said, if dollar will aggressively turn to the downside, then what we will most likely see here is obviously something like this in 5 waves. Okay, and when I have these 5 waves up, that's when we could start buying the pullbacks. Not earlier, because it's a very risky, unless you are looking for some longer term plan. Okay, and you realize that, and you are fine with it whenever we broke much lower. Okay, so if we're more looking at the short terms setups, what you want to see, firstly 5 waves up to make sure that wave C has ended. Okay, but because what I've been talking about dollar in general and stocks, I'm just aware that even Kiwi could see more weakness here, but I'm ready, and I have here it on my watch list if we suddenly see these reversals happening. Also, why bring on Kiwi? Wonka send you 100 coins. Thank you very much. Okay. Okay. Now let's take a look also on Aussie versus New Zealand dollar. Okay, and another reason why New Zealand dollar in general could be very interesting. Well, here you have very strong reversal going on in the end of 2022, and then we rallied, and this clearly unfolded as a 5-wave movement, while this one unfolded as a potential 3 waves up, right into the wave 4 area, right into the 61.8%. Now, resistance is just price or line on the chart until the market really confirms that this is resistance, and you have to see a reversal. And so far, this reversal is happening very nicely, very aggressively. You can see that we are already breaking this channel support, so looks like that more weakness could be in the cards here, at least in the short term. For a 3-wave drop, I would be looking for something like this, back towards 107.40. So again, here suggests that New Zealand dollar could strengthen, okay, and could be much better, maybe much more attractive whenever we are back to the risk on mode. If suddenly we see stocks moving to the upside, dollar turning down, then I think that Kiwi could be much more attractive when I look at these substructures. So here, as I said, broken channel suggests more weakness. That's one thing, and that happened away from the 61.8%. If you look here on those intraday charts, you have potentially 5 waves down. So maybe, of course, yes, we can see immediately another extension to the downside. Sometimes just market will not give you this opportunity to go in at much better levels after a bounce. But so far, I think if bounce will occur, we can look for resistance here at this previously broken support and the former wave 4. And then, as I said earlier, 38.2%, that's my minimum objective. So because this first drop was quite strong and extended, maybe 38.2% could be enough. Okay, so that was some kind of a lot of noises actually around this area. So clearly that's the first attractive area, 109.70 to 1.10 level, actually, I could say. Okay, invalidation level clearly at the highs. So as long as we are trading below that level, be aware of more weakness, but as I said, maybe after a pullback. Okay, now let's take a look on CAD. Okay, so looking at CAD, bigger picture, that's the daily chart. Very nice strong drop here a few months back, and now we are just trying to stabilize. Comparing the current bounce with the previous one, well, clearly this could be a wave 4. You're now at the 38.2%, so very nice level. Also notice that there is 100 level. So these big round figures are very important psychological levels. So 100, in my opinion, is very, very potential attractive resistance levels. Also, keep in mind that this base channel, whenever we retested it, could potentially limit the upside for a wave 4, okay? And you have wave 4 distance compared to the wave 2 in that area as well. So whole this area is quite interesting. Also, here I have the sub waves labeled for you. So that could be potentially wave A, wave B, and now 5 waves up for a wave C. So again, right into this resistance area. And now my question is, where from that prices, you can see I labeled few prices, 99, 97, 80, and then you have 96, 70, and then you have 96. At which price, which is the most important price you think for the bearish continuation, that you're really convinced that this market will continue to the downside in Elliott wave terms, of course? Can you answer please in the chat if anyone is looking at the levels or seeing? So is this 99, 97, 96, 70, or 96? So let me know in the chat here on either in YouTube or TradingView. So the question is, where is the most important confirmation level that this market is really resuming the weakness? Okay. So we'll see if we get any answer. Okay, it's not that hard. Okay, 99. Well, 99 is the first level, okay, but it's not the most important one. Why? Because if the 99 would be the 99 is actually the swing support. Okay, what if this is suddenly maybe this one, where the upcoming wave 4 should then find the support? Well, exactly at the 99. So this clearly is not the most important level. It's the most important support level for potential new continuation higher. So that's why this level, whenever you are observing and are ready for potential breakdowns or changing trends, well, the first swing supports never matters. Well, it matters, but much more important is the second swing support. Okay, but if we look at the whole substructures here from that rise, well, you will see actually that the most important should be this level. Let me adjust the wave count. Should be this at 97.80. Why? Because as I labeled earlier, if you have wave 1, 2, 3 and expecting wave 4, let's say that you are very bullish here, okay? What must not happen is that wave 4 must not trade into the territory of a wave 1. Okay, let me clean some lines here. So if this wave 4 will drop below this level into wave 1, then bullish count is invalidated. And that's when you will have very strong conviction that this was a corrective rise and that market is most likely ready to continue lower. Okay, of course, there could be some early indications that the top has been put in place when you will have this minor 5 waves drop, but keep in mind that even later on, this could be proved as the only first wave A of an ABC drop. Okay, so for the whole wave count, the most important is going to be 98. Of course, I know that this is still far away, but imagine you see that kind of a drop, you can still look for potential entries on the next pullbacks. Okay. Okay, so I hope that this somehow went well from my side. Okay. Now let's take a look on, as I said, Bitcoin and Ethereum. Okay. So firstly, okay, so here is Bitcoin. Last week we said that potentially we could be trading at the resistance. Definitely that's clearly the case because this resistance is still in place, and it's not a surprise because US dollar is turning to the upside. However, whenever dollar index will hit resistance and ready to resume its weakness, this one will find the support. But looking at the intraday flows here, and I'm quite surprised that Bitcoins or cryptocurrencies in general is doing quite well despite the dollar's trend that we have seen last week. So if Bitcoin will remain sideways here, then this could be even a triangle in a wave 4. If not, then wave 5 top is already in place. Okay, so I'm looking here at these substructures, and you can see that from that recent swing highs, drop is not really impulsive. Okay, it's not really that strong. So I think that this could actually still be a triangle. And if you look at the Ethereum, but even if it's triangle, keep in mind, guys, that it's not finished yet. Looking at the Ethereum, this one also could potentially be here trapped in a triangle. But keep in mind that this first drop could be even as a leading diagonal for wave A. So maybe this choppy price action will resume for a while. But overall, because cryptocurrencies are still doing very well compared to the other markets, despite very strong bounce on dollar, I think whenever dollar index, dollar in general, will hit resistance and will resume its weakness, because I think that in 2022 we have seen a top, I think that then cryptocurrencies could easily see much more upside. Keep in mind that even these cryptos were doing quite well despite the drop on technology sector last week. So I think that this is quite important, because whenever we see the support on the technology sector, I think that this Ethereum and Bitcoin could fly potentially much more, could potentially see much more upside. Now looking at Dash, I recorded also a video for Dash and published it on TradingView on Friday, I think, and we talked about this price action. I think it's a very clear wave count, and whenever you are looking for potential opportunity or whatever, well, keep in mind, or analyze this, keep in mind that try to focus on the markets that have a very clear wave structure. Don't struggle with something that is not clear. But if you have multiple chances, or if you just don't know what is the wave count, then probably the wave structure itself, it's not clear. You have to be able to recognize the wave count usually very quickly in a few seconds. As soon as you see the price chart, you should know if it's impulse or if it's correction. Okay, if that's not the case, then leave it, go to this, go and search something else. Okay, so here, if you look at this price action, you can clearly see that we have a very nice ongoing recovery, even pushed slightly above this upper line, which is very normal, normal activity whenever you are tracking wave 3. And more importantly, you have this wave 3 very extended one. Okay, and it reached 161.8 of wave 1 measured from end of wave 2. So that's typically the ideal FIB target for wave 3. However, this wave 4 is not that deep yet. Recently we found the support at the previous swing high, but I'm just aware that we could see a little bit something more deeper, more complex here, because here was maybe a sharp one. Maybe we'll just keep consolidating here for some triangle or a flat. But if we see suddenly a new high here, there's even a possibility to adjust the wave count and still say that we are potentially here in a wave end of a wave 5 or 3. So what's the idea? Well, the idea is to wait on a pullback, to wait on something deeper, like a 38.2%. For now, that's not happening from the recent high. It can, if it will, watch the support here potentially at this trend line. Okay, so I will just patiently wait on this next higher degree drop. And whenever this one occurs, I think that there can be opportunity here to catch the upside. Okay, do we have anything else? Let me check here. Okay, I'm done with my list, as I see. So what about gap on the futures on Bitcoin? Okay, let me I can do it here. Okay, you mean this gap, or which gap, or this big gap here? I'm sure that you mean this one, right? Because the Ethereum filled that its own gap, this one did not. So yeah, I mean, maybe at some point we still can retrace back towards this gap. But firstly, maybe we'll have to complete, if maybe, let's say that we are really in a triangle, here we see a new wave 5, well, maybe then this gap will be filled afterwards. Okay, but not all of the gaps are filled, but usually they are quite important. Okay, the next one, when looking to the upside, clearly maybe could be seen. So if that's a wave 4 triangle, maybe this one could be very attractive for a new reversal. But on the downside, if we see suddenly a very big dip in 3 waves, then certainly this this gap area here back from mid of January could be very, very attractive. Okay, if suddenly, let's say that wave 5 high is in. So the idea behind this is just wait on a higher degree pullbacks, and then potentially there could be a new opportunity on the long side. Okay. Okay, traders, thank you very much for your attention. I hope that you enjoyed this webinar. I hope that you will again join us next time, next Monday. I will, as always, put it out on the schedule. So we are in touch, and good luck this week. Bye.